improvement on a relative basis of the stock price, I think, is the recognition in the market that the restructuring we announced in July last year is working, that we've put the company on the right path, and that we're delivering on the objectives and milestones that we've set. And so that consistent performance is something we intend to continue, and we're gratified to see the recognition of that in the marketplace on a relative basis. But as you say, the banking industry has rated downward somewhat, and so our outperformance has allowed us to sort of push against that re-rating or de-rating of the banking industry. Our hope and expectation is that the outlook firms and people have greater visibility into the future, and they can see the course of profitability in the banking sector, that the index and the banks will begin to recover, and that we would recover with that, given that I think the company is a very different company to where we were 15 or 18 months ago. We're working hard on delivering against all of those objectives that we outlined, and being consistent in our performance and delivery. And our hope is that over time that'll be recognized in higher multiples in our valuation.
How is the redundancy program going? Because I'm hearing from here and there in the bank that, for example, people in equities are still there, despite the fact that you have shut down the business. Have you sort of halted or decelerated that given COVID, or where do we stand here?
Well, just on the equities front, I'd make a few points. First of all, we continue to be in the primary equities business, so supporting corporate issuers in primary markets. And actually, we've done very well. We've gained market share year on year in that business. And so we're pleased with the performance there. We also have equities staff in our prime finance business that we're transitioning to BNP Paribas that continue to manage that business in a transaction partnership, frankly, that's going extremely well. And finally, we're managing wind down books, particularly in equity derivatives and structured notes. The progress there is all entirely in line with our expectations. The bigger picture about our staffing levels is absolutely there's been a slowdown in what you'd call the normal attrition as we've been working through the pandemic. We are, though, on track in terms of our expense trajectory. We naturally look for ways and levers that can help us manage towards our goals, and so we don't see ourselves, in a medium-term sense, really blown off course.